investment strategies. In an earlier video, we provided you with a lowdown on Bitcoin investing. In this video, we will look at some of the real-life Bitcoin investment strategies that are working well for some savvy investors. Many people are jumping on the Bitcoin investment bandwagon nowadays because of the price rises, but most of these people fail because they are ill-prepared. They do not have the advantage of going through this training like this to help them like you do. Throughout this training, we have made no secret of the fact that Bitcoin is a volatile digital currency and it goes up and down in value on a regular basis. That is why we recommend that you adopt a long-term approach to your Bitcoin investing so that if the price does drop, you give it time to recover. So here, we will take a more in-depth look at some of the real-life methods that successful Bitcoin investors use to make a profit. The dollar cost averaging method. We mentioned this briefly in video 2. This really is the best Bitcoin investment method for beginners because it removes the need to enter the Bitcoin market when the timing is right. A lot of novice Bitcoin investors spend a lot of time and really stress out waiting for the price of Bitcoin to fall to the right level. When you use the dollar cost averaging method for your Bitcoin investing, you will spread your risk over a time period. All you need to do is make purchases at regular intervals and then hold them in your secure wallet. Here's an example of how this works. Let's say that each week you can spare $100 to invest in Bitcoin. So you will make a purchase every week for $100, and some weeks you will receive more Bitcoins for your money and others you will get less. There is no need for you to study Bitcoin price charts for hours. All you need to do is have the discipline to make those $100 purchases every week. You don't have to wait around for the right price drops just to make your purchase anyway. When you use the dollar averaging method, you will find that your profits average out when you decide to sell. You might not achieve huge profits using this method, but if you sell when the Bitcoin price is high, then you will still make a good return. Investing a lump sum into Bitcoins. This method is definitely not one for the faint of heart, but we want to cover all our bases here. When you invest a lump sum in Bitcoins, you will purchase them at a specific price point. There is an element of risk when you do this. Let's assume that you have $50,000 to invest. Naturally, you want to get as many Bitcoins as possible for your investment. In order to have the best chance of doing this, you have no choice but to wait until the Bitcoin price goes down. There is no other alternative here. You must wait and time your entry into the Bitcoin market as well as you can. The problem is that in practice, the price of Bitcoin fluctuates very often, so predicting the next price dip is really tough to do. If you have a lump sum to invest right now, we wouldn't advise that you start with this. It takes experience to make a good judgment of the right price dip. Even the experts get this wrong sometimes. When you are new to Bitcoin investing and want to invest a lump sum, you may see a price dip and then think to yourself, if I just hang on for a while, it may go down even more. Or, what if the price never reaches my low point? The same scenario applies to selling your lump sum investment. How do you know the best price to sell your Bitcoins for? It may be very difficult to sell at the prices that you need to make the profit you planned for. If you sell too soon and the price goes up even more, then you will criticize yourself heavily. Think what you could have done with all of that extra profit. Obviously, a lump sum investment will provide you with much higher profit than the dollar cost averaging method if you get the timing just right. Bitcoin investing hedge fund. You may not be aware of this, but there are actually cryptocurrency hedge funds available that include Bitcoin. This could be a good alternative for you if you do not want to learn about Bitcoin investing that you will need to do if you want to use other investment strategies. The biggest drawback with any hedge fund is the expensive performance and management fees. Cryptocurrency hedge funds will insist that you pay the management fee up front. Usually, these fees are in the region of 2% of your investment, so if you want to invest $100,000, then you are going to have to pay around $2,000 as a management fee, which leaves you with $98,000 for investing in cryptocurrencies. You will be appointed a hedge fund manager, and they work on a profits percentage basis. This can be as high as 20%. So if you were able to secure a $40,000 profit from your investment, then you will have to pay $8,000 to your hedge fund manager. These figures may startle you, and cryptocurrency hedge funds are not going to be everyone's idea of a good thing. But when you think about it, you will have totally hands-off investing here, which can make big profits for you. Avoid Bitcoin and cryptocurrency scams. Although Bitcoin is certainly not a scam, there are plenty of people out there that will try and scam you out of your precious Bitcoins. Like any other high-value commodity, some people will do everything that they can to get their hands on Bitcoins. So, in this video, we will look at some of the most common scams that you need to avoid. Bitcoin exchanges that are fake. We would always recommend that you use a cryptocurrency exchange that has an established reputation and have been operating for a few years. In this training, we have told you about Coinbase, Kraken, Poloniex, and Bittrex. There are others too, such as CEX.io, Bitstamp.net, and Changely.com. There are so many cryptocurrency exchanges available today that it will be impossible for us to vouch for any of them. You need to conduct your own due diligence here and find out the history and look for reviews from users. If you see an exchange offering rates that are just too good to be true, then be very suspicious. Unfortunately, there are fake exchanges that look like the real thing, and then when you try to trade with them, they will steal your Bitcoins and you will never see them again. These fake exchanges prey on newcomers to the Bitcoin space. They offer the opportunity to purchase Bitcoins for up to 20% lower than you would see on reputable sites like Coinbase. Unfortunately, some new people fall for this scam. You know better now. Another sign of a fake exchange is where they offer to purchase your Bitcoins from you at a higher than average price and then send you the amount in US dollars to your PayPal account. This will never happen and they will just steal your Bitcoins. Phishing scams. These are performed using email. The aim is to get the login details for your online wallet. So you will receive an email from a domain name that looks like Coinbase.com, for example, that is not from the genuine site. It might be from Coinsbase.com, pretending to be Coinbase.com, or they use other tricks. If you fall for this kind of phishing scam and use your Coinbase.com login details to log into the fake website, then the scammers then have your information and can log into your Coinbase account, lock you out of your own account, and steal all your Bitcoins. Malware scams. These are nasty. You'll be asked to click a link in an email or on a website that will download malware on your computer without you knowing it. Usually the malware is a keylogger which will record everything that you type and send this back to the scammers. So if you type in your Coinbase username and password, this will be shared with the thieves. Never click on any links in emails or on websites that you are not 100% sure about. If you notice something being downloaded, then stop it immediately. Ponzi scams. If someone offered you a guaranteed return on your investment, then you would be interested, right? Well, here's the thing. Nobody can offer you this kind of guarantee with cryptocurrencies. There is no such thing as a risk-free investment. Bitcoin and other cryptocurrencies are volatile by their very nature. If someone tells you that they can guarantee a daily 10% return on investment, they are a scammer. A Ponzi scheme pays off the early members with the investments made by new members. It has been going on for years, and so many people fall for new ones. The best way to avoid Ponzi scheme scams is to always bear in mind that if it seems too good to be true, then it probably is. Mining scams. There's a lot of interest in Bitcoin mining. Cloud mining is a concept where you do not have to invest heavily in the necessary high-level computer hardware for Bitcoin mining. Simply join a group and the mining is done for you. Of course, you will need to pay for this privilege. While there are legitimate cloud mining programs, there are a number of scammers as well. Take a good look at the website to see if they have a secure HTTPS domain, and also search for reviews about the company on search engines. We don't recommend that you get into Bitcoin mining when you are starting out. If you do like the idea of cloud mining, then you must do your homework, otherwise you run the risk of scammers taking your money for nothing in return.